This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pashurdias. Thanks for joining us at XM.com. The third quarter got off to a subdued start on Monday, as there was no respite for equity markets from the worsening economic landscape globally, though major currencies were able to bounce back amid a more cautious dollar and some positive headlines out of the UK. After a busy week of Fed commentary, where policymakers doubled down on their 2% inflation goal, recession risks continue to dominate, even as investors battle new headwinds. One such unexpected headwind has been British Finance Minister Kwasi Kwarteng's tax-cutting budget that was met with an unforgiving response by the markets, wiping out billions from UK assets. But Kwarteng now appears to be exercising some damage limitation, announcing that he is ditching his plan to abandon the top rate of income tax of 45%, following a revolt by Tory MPs who threatened to vote against the budget. Although this won't completely solve the issue of the UK's ballooning debt, it is a step in the right direction. Sterling climbed back above $1.12 on the back of the headlines, having been unable to close above the level on Friday. But the euro hit a stumbling block following stronger than expected inflation data on Friday. The Eurozone's headline rate of inflation hit a new record high of 10.0% in the September flash estimate, adding to fears that the European Central Bank will have to hike rates even more aggressively. The dollar, while flat against a basket of currencies, is attempting to push its way above 145 yen, as a disappointing Tankan survey weighed on Japan's economic outlook. The fact that the yen is struggling so much on a day where the dollar is generally softer doesn't bode well for the Japanese currency. The dollar seems to have taken to the sidelines today ahead of the IMS manufacturing PMI due later in the US session, while there's likely to be some caution as well about Friday's jobs report. In equity markets, US stock futures were swinging between losses and gains after Wall Street just posted its third straight quarter of declines, but the mood in Europe was decisively negative today, with major bourses declining by about 1%. Worries about the imminent collapse of Credit Suisse dogged European markets. This is today's Daily Market Comment. Thanks for joining us at XM.com.